Bienvenue à tous.
Welcome back. This is the second part of Business Africa. The suspension of Zimbabwe Stock Exchange and mobile phone trading by the government has drawn much criticism. Economists such as Prosper Chitambara and Professor Tony Hawkins think that this decision will create uncertainty and negatively affect investor confidence. It should be noted that the suspension measure has been taken in an attempt to protect the local currency. Saj Manku and Eric Oteng have more.
The Zimbabwean government's decision to suspend stock exchange and mobile phone financial transactions has been questioned by many. For economists, the measure will have a negative impact on the mobilization of capital.
Suspending that, it means you're actually suspending the mobilization of even fresh capital into the country, which is actually severe and adverse implications on the economy in terms of, for example, economic confidence.
A lack of confidence which will result in an increase in the country's unemployment rate. The lack of capital will result in companies shutting down.
Because if we are not able to attract capital inflows, if we are not able to attract foreign direct investment inflows, then it means no employment creation. In fact, this year, like I said, because of COVID-19, a lot of companies that are already operating are going to close shop.
The prospects for the Zimbabwean economy have been made bleaker by the COVID-19 pandemic. The World Bank is already forecasting a 10% contraction in gross domestic product by 2020.
The coronavirus pandemic, which affects men and women differently, accentuates gender inequalities. Global bodies like the World Bank are emphasizing the impact of COVID-19 being greater for women. Job losses, lower living standards, and increased domestic work. More than half could become unemployed this year, according to the International Labour Organization. Details with Elaine Wangalwa and Bridget Ugwe.
The economic hardship in Africa due to the COVID-19 pandemic is estimated to be severe, resulting in the first regional recession in more than 2 decades. In the face of the human and economic crisis caused by the pandemic, existing gender inequalities are worsening. According to a World Bank report, women are being gravely impacted. Informal workers, most of whom are women, account for more than 90% of the labor force in sub-Saharan Africa. Informal sector jobs are particularly at risk during this pandemic. Women in Africa make up 58% of the continent's self-employed population. However, women-owned businesses are particularly vulnerable to shocks. Recently, the International Labour Organization stated that women are more likely than men to lose their jobs this year. According to the World Bank, to protect women-owned firms from the effects of COVID-19, lines of credit and meso-financing can provide much-needed liquidity to women entrepreneurs who are already less likely than men to access loans. With this in hand, the institution has urged African governments to support women during this period.
And with that, we've come to the end of Business Africa this week. Your company is always much appreciated. You can still keep in touch with us online. Visit our website, africanews.com, available in both English and French. Until next time, stay safe.